This is a thing now. We're just waiting for this countdown thing that I can't just go. It's doing its thing. You're making me wait. I did. Everybody's there, man. I'm ready to roll, man. This thing says I still got some time until I can talk. Shit. It's time to talk. 20 seconds. I've waited 8 hours for this. Standing in the cold. They wear a diaper. That's what they do there, you know that? In New York, they stand in the people wear diapers. Go. 3, 2, 1. There you go. Hey, welcome to Closing Beat, everybody. Happy Tuesday. How you doing? Good? Everybody's good out there? Hey, how could you not have a good day? It was pretty good out there, right? Pre-Fed rally, so to speak. We're going to talk about the Fed here and the performance wrapping around the stock market around Fed Day, and in particular on Fed Day, because well, it's about Fed Day, and so, well, we know we got a little volatility coming. Do we? That's what I really want to explain today. I'm gonna share some information with you. Teach you how Fed days can be a little bit wild. We're going to show actually how those look. Anyways, we're trying out a new slogan here at the bottom there. Our family wants to be your family's advisor. You know what I mean? That's so full house, man. It's just like a total nice thing to say. Hey, we're all family here. We want to be your family's advisor. I came up with that. That's my thing. So I'm going to roll with that one for a while. So go ahead, make fun of me, do what you got to do there. All right, the S&P officially finishing up January. It's over. Today's the 31st. Yeah. So, was that the best month ever? The best January, I should say. Sorry. The best January ever for the stock market? No. Yes and no, right? So it wasn't the best January ever in history, but it was for the SPY. And a lot of people use that. That is the original ETF, the granddaddy of all of them, the very, very, very first ETF of any ETFs in existence. So if you were to look back, in fact, that does rank as the best January ever. And I'm going to try to just sneak in here. It's going to look a little odd for just a second. Bear with me. There you go. So I'm using our research site here. We have a little tool where you can look up performance and then kind of track forward stats after things have happened in the past. And what I did is I put the SPY gaining more than 5% over a 1-month time period. And I just look back through the life of the ETF, right? And so then what I can do, I can come over here and I can sort by date. So on the left, what you're looking at is the performance in a given month. So for example, November 2020, obviously that was a great month. And I got to do this one more time. I did it backwards. I clicked it too many times. That's my fault. Why is it not sorting this time? Charlie. We'll have to get Charlie's help on that. But one of the things you can do, oh, maybe I was clicking on the date. Trying to pull January's up to the top. Something like that. Anyways, one of the things you could do, hopefully it sorts for you, is you could, oh, I went back 35 years. Okay.
So one of the things you can do is you can look and see, we gained 6% on the SPY for the month of January. And you kind of looking through, you're just looking for any January in here. You're not really going to find any, right? So January for the SPY, this ranks as the best one ever. For the S&P, remember that's the index. That goes all the way back to 1928, right? Going into 1929 there. And so that's a good month, right? Let's celebrate while we can, right? We had a rough 2022. Let's celebrate all the goodness here while we're chilling for the moment. If you look at the S&P here today, over 1/3 of the names in the S&P have reported earnings, just over that. Earnings are down about 3% right now. There's one negative. I'm going to be a little picky there. Earnings as a whole for S&P stocks that have reported down about 3% when we compare it to the last quarter or the same quarter a year ago. The trouble is, most of that support, keeping that number small, is from the energy sector. If you were to be kind of crafty and say, well, wait a minute, energy had a killer year last year. They made tons of money. If you back out energy and you say, just take the other 10 sectors of the S&P and find all the stocks that have reported earnings, you find the earnings are down about 7%. So it's a little bit weaker than the headline number if you back out energy. So the good news is you've got 100 names that are due to report this, over 100 names that are due to report this week here. So we got a chance to recover a little bit from that. I do want to point out one interesting one here. Whirlpool. So Whirlpool reported earnings. It was a heck of a beat there. Their raw input costs are improving or decreasing. So what does that mean? Inflation. That's a good sign for inflation. See how we can look at an individual company and sort of glean the performance of inflation and the economy and how things are looking. Inflation coming down, not in eggs from what I hear, but we've got that going on there. They see recovering production and sales in 2023. These are their comments. So they're already starting to see a recovery from what little pullback they had. So when you look at something like that, you go, well, that's weird because that's kind of like a discretionary product. I don't need to buy Whirlpool refrigerators, Whirlpool washer and dryers. I don't necessarily need that. I could repair it, right? And in addition to that, when do you buy that stuff? When you move to a new house, when you remodel a house, when you flip a house, when you fix it up to rent it out, when you fix it up to live in one side and rent out the other side. You get what I'm saying? So it's a good sign for maybe a stronger housing market than what we're actually seeing. You're seeing a little softness in the housing market, of course, right? Inventory is still an issue there. But it's an interesting measure of the housing market because, I don't know why this is off here, but if you look at the S&P 500, S&P 1500, the Whirlpool is the only public company that's in that home appliance kind of thing there. And so that's our only benchmark to use. And they reported earnings, of course, so good news for them. And you can see from a price standpoint, just itching to break above the 200-day moving average there. And I, of course, wish them well. If you look at the NASDAQ, clearly above the 200-day moving average yet again. And if we look at the NASDAQ so far this year, it is your leader. It is officially up double digits, 10.5%. Gave back a little bit of that yesterday, but it's back in the double-digit club for the year. The next in line is going to be the Russell. Small caps, man. Been saying the small caps. Well, our small cap fund is killing it here through the month of January. Happy to see that going. It is up almost 10%. Just barely missed it by the end of the day. So yeah, there's always tomorrow. The S&P comes in third place year-to-date, gains of just over 6%. We already talked about that. And the Dow officially comes in last place. Remember, it was the best performer last year, so kind of like energy. It's taking a little bit of a break right now, consolidating inside of a range here. So if you're a Dow investor, you don't lose hope in it, but you got to wonder if your money is better used somewhere else. This in here is dead money for the moment. We don't like to have dead money. In 2023, you got to make the most out of every dollar that you have because money's tightening, and you see me making a big deal about that in the Jazz After Dark. Speaking of Jazz After Dark, there are free videos that come out 7 o'clock at night. They come hang out with me. We grab a drink, maybe talk about different spirits and things along the way. But last night we talked about 4 mistakes that people make with their Roths and not the basic stuff. So I hope you enjoyed that. Tonight we'll be talking about kind of adding to the concept of using a Roth for your kids' college. It's a topic that advisors don't touch on too much because it's a little bit difficult to explain. Well, hopefully I'll make it simple for you tonight. Come hang out with me if you want. Also on the research site, we have the top stocks to benefit from the Inflation Reduction Act. That video is live. Our research site is open for you to join if you want to support the channel, support the company, but you can't be a client of Jazz Wealth. It's $13 a month, and we donate everything anyways, but if you want to join, $13 a month, and you can see that video along with the research stuff as well. All right, enough of the sales pitch. Let's move on. I do want to point out oil. It's trying. I don't know what to tell you. The average expectation for oil prices this year is over $90 a barrel. So we're not quite there yet, but so far kind of moving in the right direction. I do want to talk about that here in just a second. Looking at bonds, we talked about this yesterday. It's just going to be quiet until the Fed makes their decision, comes out with their press conference. It's just going to be quiet. And so you see the small, narrow range days. If you didn't notice a lot of bond activity today and going into the first part of tomorrow, that would be totally normal. Speaking of energy and oil, we have a huge disconnect here. We have energy stocks holding up, but we have commodities, in particularly energy commodities, natural gas and heating oil and crude oil and Brent and stuff, all very weak. There's a huge disconnect. Look at this, right? Crude oil down, trending lower, holding lower, but yet energy stocks, and I'll use the XLE as my example here, sitting at highs completely in the opposite direction. That can't last. That spread that you see between high energy prices as far as stocks go and the actual cost of commodities, that can't last. What happens, these companies that are up here, either one of two things has to happen. Energy prices have to catch up so they can maintain their existing profit margins and all that stuff, or energy stocks have to come down to, of course, accommodate the fact that they're not selling oil or energy for as much as they were in the past. So just want to point that out, and you could use something like the Bloomberg Commodity Index to compare energy prices to the actual XLE or energy stocks there. So something cool to point out to you. You've got the dollar refusing to bounce there, officially hitting a bear market. It's down over 10%, and it was already down 10%, but official bear market there for the dollar. In dollar terms, energy doesn't look so bad. However, most of us don't make decisions on energy in dollar terms. Global companies do, but we do not as investors, so we don't often compare it to that. All right, your lesson of the day we're going to talk about is Fed Day, man. Get this Fed Day thing coming out. Remember, the focus is not going to be on the fact that they're going to raise rates a quarter point. 99.2% chance that they're going to raise rates a quarter point. It's a given. Right? We know that. The market's had a chance to price that in. It agrees with the Fed at the moment, and people are making their bets as if that's what's going to happen. So if we already know that, what do? You look at the comments. This is going to be another one of these Fed meetings where if the dude so much as sneezes while he's talking, people are going to go, oh no, he's going to raise rates again. So the point is that his comments will be the focus. So when they do that press conference and he starts talking tough and everything, that's what we're looking for. What will you do next? Will you go up another quarter point, then hold it tight for a while? Will you hold it tight starting now? Right? All of that's going to be market moving. However, it doesn't move the market during the day. It tends to do it towards the end of the day. So the first part of the day tends to be pretty quiet. And to prove that to you, here we go. Here's the last 3 Fed meetings, all color-coded beautifully on a chart. And this is during the day. So at the market open, you see that? Well, at the market open through the first few hours of the day, we get past lunch. We come up to 2 o'clock, which is where the actual announcement happens. And then 2:30 is where the press conference actually starts. So what I want you to notice is quiet. Wherever the market starts, it tends to stay. So if the market starts up, it tends to stay up and wait for the Fed. If the market starts down, it tends to stay real small, narrow range and say, well, we're content to just wait for the Fed. In either case, the last 3 Fed announcements, so the last 3 Fed announcements resulted in a negative day. Then the 4 previous to that were all positive. Jerome Powell has the worst record in terms of market performance on Fed days. It doesn't mean anything. It's just something you can track. So at 2 o'clock, expect wild volatility. The stock market actually tends to shoot in one direction, turn around, go in the other direction, then continue in the original direction. I don't know why. That's just something that happens every time. You can watch it and see it very clearly on like a 2 or 5 minute chart if you want. But if you're looking at the performance, you expect chaos compared to the morning. Okay. I'm not saying chaos in the broad market and we're going to lose hundreds of points on the Dow. It's going to be crazy. I'm saying you expect chaos compared to the morning. So if you're watching the market in the morning and you're like, oh, this is cool, nobody cares about the Fed, wait till 2 o'clock. That's where the action begins. Wild swings back and forth. Day traders love this time of year or time of quarter. They get in there and of course, have their fun and do their thing. Look at the one here from in November. We shot up, pulled back, and then just fell apart. And in every case, the previous day's close is drawn in 0 there, and you can see we finished negative every time. So something to keep in mind. Just want to point it out. I'm not saying collapse in the stock market or anything, but I am saying chaos or volatility in terms of comparing it to the early part of the day. All right, stocks in the news. Let's see what we got going on here. Oh my gosh, there's so much, man. There's so much going on. Bed Bath & Beyond, they said we could file for bankruptcy as soon as this week. I don't get that. I read that myself. I was trying to dig through and see. You don't just say I'm probably going to file bankruptcy this week. No, you have that stuff prepared. It's ready to go. You either sign the document or you don't. So you can't just voluntarily say, yeah, this week we're going to file bankruptcy. Think about yourself personally. You don't just decide that, right? So it's largely expected that they will be filing for bankruptcy, unfortunately. So no more discounted coffee for you guys. No more of those postcards in the mail. Not that they're going away, but for the moment, they probably won't spend money on that. McDonald's, excuse me. McDonald's, not too bad, actually. So McDonald's reported on earnings there, beat on earnings, beat on revenues there. Store sales up 10%, a little light there. Stock pulled back, but there's not much to say here. Like, do you make a decision on McDonald's here? Do you have any guidance at all as to where the stock's going to go? Not really. You got basically a sideways moving stock, and unfortunately, that doesn't do anything for you making a decision in the short, mid, or long term. Besides the fact that they had some good comments about China, getting that ramped up again. So good for them. UPS, you like when they do well. You know, it's important that UPS does well because remember, we're just buying stuff here in the States. We just buy stuff, sell stuff. Stuff's just boxes moving through the skies. So UPS, not too bad there. Average revenue per package. That's kind of like the airlines, but they do it by package instead of seat mile. Down about 2%. The stock enjoyed a better day, in my opinion, because of their $5 billion share buyback. We know, you guys know, from watching, that in weaker or deteriorating economic performance, companies that return money to shareholders perform better. That's not a myth. That's not a guess or a conspiracy. We showed you the stats on that. It's very, very clear that those stocks get rewarded. And so I'm going to follow that stat and just assume that's why they got a bounce today. Also, they raised their dividend about, 6%? 5 or 6%. So they did raise their dividend. And of course, that's good news for them. Marathon Petroleum. Not really great. Earnings did technically beat, a little weak on the guidance going forward. If you want to look into the details there, they attempted to make up for this by buying back some shares. It did ultimately put them a little bit off of their lows for the day, but that's a tough one there because what do we know? We know that oil prices are cheaper. So you can buy back all the shares you want. We know you're losing, well, not losing money, but we know you're making less money now. But your price is up here. Just need a little reset. That's all it is. There's nothing wrong with the company, at least from what they said today. General Motors in the news. I find they had quite a bit of optimism. The stock was up 8%. People bought into the optimism. They are shooting for 400,000 electric vehicles to be produced in the next 18 months. I'm not saying they can't do it. I'm even just saying, compare that to a company like Tesla that basically made decisions as if it was a sole owner corporation. You know what I mean? And here you have General Motors saying, not only are we going to do that, but we're going to get that number to a total of 1 million electric vehicles a year by 2025. For the moment, people believe that. They've also made some investments in other lithium products and lithium I don't know if they call them quarries or what they call them, but to be able to get access to that so they don't have to go too much on the open market. All right, what else do we have here? That went by quick. Tomorrow, earnings from Boston Scientific, Johnson Controls, Altria, Old Dominion Freight Lines. That'll be a fun one to look at for transportation, right? We'll follow up with what UPS said. Old Dominion's obviously a different company, but Otis Elevators, T-Mobile, C.H. Robinson, so there you go, another transport company. eBay, Whole Logic, Meta will get all the attention after hours there, and Meritage Homes. By the way, Pulte Homes reported today as well. Isn't that interesting? So we talked about the home builders being stronger than the market in December and early January. Look at that. Pulte Homes, what's the deal? I thought this was rough out there. I thought housing was like slowing down and all this stuff. Well, they handled it well. All the home builders did. I've said that numerous times. Tomorrow we'll find out more from Meritage Homes, but basically today was your glimpse into what we hope they actually report. So best of luck to them, and we will see what happens. All right, let's pop over here, see if you have any questions. I'd be happy to try to answer those questions. Otherwise, I'm going to go on about my day, you know. I'm going to go out and about do what I do. The Tesla fan. Maybe bought too much Tesla. I don't know. If you play XLE versus oil, what symbol ticker is the buy side? If you play XLE versus oil, what's the... Well, are you saying like short energy versus buy oil? You could do a pairs trade there. You'd have to use maybe the oil futures. I don't like the OIH anymore. They had proven themselves to be weak in the past. Yeah, and still that way. I don't like when oil went negative, they just on a whim decided they were going to change how they handle their ETF. Borderline illegal in my opinion, but I don't like that. ETFs are supposed to have their mission and basically execute on the mission. And somewhere there were just a group of people that sat together and said, no, we're worried, we're going to change it. I don't like that. You don't want somebody weak or emotional dealing with at least my dollars anyways. So that's, I would say a pairs trade, maybe the XLE versus futures, crude oil, if you want to use that. Just make sure you have the same notional size, right? Not the number of, like, not one contract for 100 shares. You want to have the same notional size there. Yep. Oh, yeah. You think Tesla's going to hit new highs? It's got a ways to go, right? Quite a ways to go. I don't know about all that, man. That's pretty aggressive thinking there. What is the predicted Fed rate hike tomorrow, and what rate hike amount would cause a drop? Well, it's a quarter point, so it's basically a quarter point. There's no predicting that it'll be something else. It's a quarter point. There's no, they're not going to do anything different at this point. Yep. Yeah. Giovanni, like your AMD at 65, do you? Oh, you want it to pull back to 65? I don't know. I don't know what the question there. Does anyone own Lemonade? No, but I looked at their. They were supposed to get into disability insurance. I like the product. I was going to look into doing that, but they don't have it available yet. Yep. It's the Fed's words. Doc's got it right. Yep. You expect to see the Fed saying the right words to scare us or dip us below. I think they're going to talk tough. Yeah, I don't see any reason why they would say all clear, we're good. I think they're gonna be talking tough there. Yep. Oh yeah, Polaris had good earnings. Yeah, that's the outperformer in that sort of personal space, the fun space. Got 2 ETFs, 9 stocks, Parrot heads up 10% 2023. Good job. What are some of the stocks out of curiosity? Enphase with the jump up. Yeah. Oh yeah, trying to come off the lows there. Mm-hmm. J-Dub, the video is up, ready to roll. It is in there and ready for you. Straight Jacket's not quite ready to retire. Need a couple more crashes. Yeah, and think about that now, guys. Like, you go, I don't want the market to fall apart. When do you make the most amount of money? We just proved it. The market just proved it to you. You make the most amount of money when you buy discounts. Don't run from the market when it goes down. Get into the market, and that's where you have your biggest gains. 10% gain on the NASDAQ, 6% gain in the S&P, almost gaining more in 1 month than it does all year. Don't you want to be a part of that? But yeah, I'll cheer that on for you. Though a couple more really severe pullbacks will be welcome. Meta tomorrow, yep, that'll be a focus, especially after Snap. You're right, but they didn't give any guidance. So Snapchat just was like, oh, it is what it is. We're not going to really give you any guidance. You got to do it. You can't. Anytime you back away from that, people have some questions. If we do have a recession, what would cause it? Doesn't everyone already expect the rate to keep rising? So what new thing would cause the fear of a recession? Well, recession is an economic word or term. So recession is just simply caused by people slowing their rate of spending in mass, right? And the presumption is that with higher rates, you won't move as much, which means you won't buy as much stuff. You presumably won't be able to get that better job, right? So you'll slow your spending, and that will slow general GDP. Yep. J-Dub, we kicked you out, man. We said, no, you can't log into the dojo. Asked about that damn video so much. We said, just kick him out. Is it a good time to buy a house right now? According to Dave Ramsey, yeah. I think it depends on where you're at. And you've probably noticed it. In your area, prices have pulled back. I mean, there's a level where you go, okay, I'm happy with that. I'm not going to move for 10 years. I do need to buy a house, and so therefore, I think this is a fair price. I don't think we're there yet. But I like discounts, so I'm probably never going to be happy. Yep. And we'll wrap it up there. We will wrap it up with that. Always better to buy than rent. Well, that's statistically not true, but it also depends on where you're at. So that's a tough one because you can't use the national average if you're making that argument. For sure. Totally understand that one. All right, we'll wrap it up there. Appreciate you guys hanging out here with us today. Hope you have a great rest of your day. We'll see you later on Jazz After Dark. Let's talk about using that Roth IRA for college. Don't just blindly do a 529 or custodial account or pay cash. If you're really going to pay for your kids some of their college or all of it, got to look a layer deeper. We're going to look at that layer deeper here tonight, and I'll see you in a little while. Bye-bye.